Today we'll be discussing the Form 3520, Annual Return to Report Transactions with Foreign Trusts and Receipt of Certain Foreign Gifts, with a focus on the foreign gift reporting aspect of the form. This form is perhaps the most discussed form and most common penalty I see in practice. Welcome to Tax Facts, where we discuss the most frequently asked questions I receive as a tax controversy attorney. My name is Eli Knopf. The basic triggers for the Form 3520 are certain transactions with foreign trusts, ownership of foreign trusts under the rules of Section 671 through 679, and receipt of certain large gifts or bequests from certain foreign persons. We will focus most of our time today on the foreign gift aspects of this form. A U.S. person who receives a gift from a foreign person in excess of $100,000 is required to file Form 3520. This threshold includes both financial, such as cash and bank accounts, and the fair market value of non-financial assets, such as real estate. The due date for this form is the same as the Form 1040, generally April 15th. But keep in mind that the Form 3520 is currently filed separately from the Form 1040 and mailed to Ogden, Utah. Failure to follow the proper instructions or failure to timely file the form may result in 5% penalties per month for each month the return is filed late, up to 25% of the foreign gift. With that in mind, make sure to file with proof of mailing so that if the IRS claims it was late, you can prove otherwise. This is an all too common issue I see in my practice. To illustrate how significant the penalty is, keep in mind that it is not uncommon for a U.S. person who immigrated into the country and has foreign parents to receive an inheritance either during life or after death from foreign parents while living in the U.S., thereby triggering the Form 3520 filing requirement. For example, a U.S. person receiving $1 million in inheritance or foreign gift, which, as a side note, is not astronomical considering property values and modest retirement assets. If that person fails to file a Form 3520 timely for the foreign gift, they may be subject to a $250,000 in penalties for failure to timely file the form within 5 months of the deadline. Remember, it's a 5% penalty per month. That penalty is even more painful since there is typically no income tax associated with foreign gifts. If you're out of compliance and have a delinquent Form 3520 to file, there are options to come into compliance, but you should consult with a qualified, and I'll emphasize qualified tax attorney who practices in this space. Feel free to give us a call to discuss. If you've already filed late and received a penalty notice, also known as Notice CP15, my condolences. I know how frustrating and stressful that can be. Keep in mind that this form has a penalty appeal deadline that should not be missed. Taxpayers can assert a reasonable cause defense, which should be carefully considered and drafted amongst other possible defenses, which I would be glad to discuss after considering your specific facts and circumstances. In closing, the IRS has been very aggressive with the Form 3520 penalty assertion and abatement process. I cannot stress enough that taxpayers with this form of non-compliance must seek qualified advice on how to remediate these issues. Filing the form late is almost guaranteed a late filing penalty and is not a strategy. I invite you all to subscribe to our YouTube channel if you're interested in hearing more tax facts and other relevant content. You can also visit our website at askfrost.com or give me a call to discuss if you have any questions. Thanks for joining today.